please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now let's take a look at what took place yesterday on trade. Back home on the large trade, the Nifty ended lower by about 100 points. The Sensex too lost about 300 points and it slipped below its 100-day moving average by close. The bank stocks fared slightly better, recovering from the 200-day moving average, but did post a 2018 low intraday. The mid-caps mirrored the benchmark indices. What's in store for today? Well, the global cues are fairly positive. Anisha, what's likely to happen today?
Well, President Trump has tweeted yet again, and this time it is something that has moved the stock higher, because he said the tariffs on steel and aluminum will only come off if new and fair NAFTA agreement is signed. Now, this has opened a door of negotiation, and now the investors believe that the trade war might be settled by diplomacy and maybe not the tariffs and the retaliatory war that we were seeing coming in from the European Union as well. And that's the reason the Dow ended the 4-day losing streak, ending higher around 330 points. Remember, the Dow was down about 150 points at one point of time, so recovering close to around 150 points in trade. The S&P and Nasdaq also closed 1% higher as far as those two indices are concerned. If you look at the CBOE VIX as well, now that one was down about 4.5%, settling at around that 18% mark, telling you that volatility and fear also has come down a bit as far as the US market is concerned. The stocks that did well included the likes of Harley-Davidson, so the auto stocks also recovering, so telling you that all the nervousness regarding the trade war is ebbing away. The European market as well, if you look at the CAC, DAX, FTSE, all gain anywhere between 0.6 to 1.5%, except the Italian index. Now, most of the European markets appear to have brushed aside the concerns regarding the hung parliament in Italy. However, the Italian index did react to that. That one was down another 90 points in trade yesterday. If you look at the Asian markets right now, where all are trading in the green, starting with Nikkei. When we started off the show, that one was up around 2% in trade. Other than that, the Kospi around 1.4% higher. The Taiwanese index also up around 1% in trade. The SGX Nifty for starters was suggesting that we'll open about the 10,400 mark. That is the case right now as well, up around 60 points when it comes to the Nifty. If you're looking for domestic cues for trade today, there aren't many. Of course, the parliament is going on and there is expectation that there might be some debate in Lok Sabha on the alleged PNB case. That might move the Bank Nifty a bit. So that should be one thing that we would keep an eye out on. Other than that, if you look at the fund flows picture as well, the situation continues because the FIIs, they remain net sellers yet again. 367 crore is what they have sold in the cash market. The DIIs, they were supporting the market earlier in the month as well, but now they have been net sellers yesterday. They've sold around 150 crore in the cash market yesterday. Talking about the key levels to watch out for, now Nifty Bank yesterday successfully defended the 200-day moving average, and that staged a tad bit of recovery, and that is what the analysts and experts expect today as well, that it would be the Bank Nifty that would lead to a bit of recovery in the Nifty as well. For the Nifty, of course, 10,300 on the lower side is seen as a crucial support level. That does not look likely that would happen today. The 100-day moving average that Mangalam also was pointing out earlier, 10,446. The initial sense that we are getting from SGX Nifty is around 10,420 mark. Let's see whether we are able to go above that 100-day moving average or not. But as of now, the cues look positive and it looks like we'll start in the green, Mangalam.
All right, Anisha, thanks a lot for that. Stocks, what are the stocks we're watching out for?
Well, a lot of stocks actually that we'll keep an eye out on. First on the screen is, of course, Sun Pharma. Remember, the 3 observations were given by US FDA for the whole unit. Now we know the nature of the 3 observations. Credit Suisse, for example, says that it would need remediation, but maybe reinspection would not be needed. So that is some bit of positive news for Sun Pharma, perhaps. Axis Bank, well, RBI has imposed a penalty for non-compliance of IRAC norms. Similar is the case for Indian Overseas Bank. Now, the amount is little, but given the sentiment around banks, they might react a bit. Another exclusive coming from CNBC TV18, wherein we understand that ED has summoned former PNB MD, which is Ms. Usha Anand Subramaniam, for questioning. Now, that might impact both the stocks of PNB as well as Bank of Allahabad, because remember, she is currently the MD and CEO of Allahabad Bank. Fortis Health, well, the Singh family control drops to 0.14%. That is a trend we have been seeing. The control has been been coming down, so maybe the stock would react to that. That stock, of course, has remained volatile all through the month. Other than that, JSW Steel, where we understand that they've signed an MOU to acquire Italy's second largest steel maker, which is a Ferpi. The deal is pegged at around 600 odd crores, so that is something you should keep an eye out on. M&M, they have unveiled a new off-road vehicle, as well as they had given out the sales number for the month of February. That looked all right. HDFC, well, they have approved the QIP issue of 1.03 crore share at 18.25, which is around 30-40 bucks higher than what the stock is trading at. So that might remain in focus as well. Sanghi Industries, the board is supposed to meet on March 7 to approve issue of non-convertible debentures. More issue coming in. This is from Bharat Wire Ropes, wherein they are looking to raise funds via FPO, QIP, private placement. The board there will meet on March 9th. JP Associates, where IndusInd Bank, which had a lot of pledge shares for JP Infratech, they have held on to that particular pledge as well. JSW Energy, they have acquired JSW Electric Vehicles, something on line with what the company has been doing in the past. Ramco Industries, they have signed an agreement with Ramco Cements for sale of clinker grinding unit situated at Kharagpur, so that two stocks will be in focus as well. And lastly, liquor stocks might be in focus because we understand that there's excise hike on country liquor as well as IMFL liquor in the state of Haryana. So watch out for the liquor stocks that are active in that state as well, Mangla. Well, President Donald Trump's decision to impose tariffs on steel and aluminium imports sparked fears of a harmful global trade war. Here is Kenneth Rogoff in an exclusive conversation with CNBC on what he makes of this and the impact on the U.S. economy.
I tend to think we will see a version of this tariff, but I'm not sure that there's more to follow. He has to do it for his base. And let's not forget, if Bernie Sanders were president and possibly the next Democrat, if there's a Democratic American president, they're going to want a very similar thing. Their base is screaming for it. So we're going to get it, but I don't necessarily think it's going to turn into a trade war. It's quantitatively not that big in the United States. The tariff numbers can have a tiny, tiny effect on inflation because it's very small. The impact on the U.S. economy is small. What is going to have an impact is that global growth is returning, unemployment's very low, and of course we have a pretty big fiscal stimulus in the U.S. I don't necessarily know that we're going to have inflation coming back in a big way, but I do think it's going to climb north of 2%. And possibly even get to 3% at some point within the next 12 or 18 months. The Fed will raise interest rates, but they're very cautious about going too fast because they don't know what they're going to do if there's a recession. So I do see inflation going up, and that's going to create some volatility. I don't see it skyrocketing.
All right. We also caught up with Jayant Dasgupta, the former Indian envoy to WTO, and Meera Shankar, the former Indian envoy to US, to understand what this potential trade war means for the global economy and the nations that stand affected due to this move. Listen in.
I do think this has the potential to escalate into a major trade war, which can bring about a lot of misery and loss of jobs, economic stagnation, even recession in the worst case scenario. And what has brought it about, I can't really put my finger on it, because the US gets aluminium, for instance, at cheap rates from Canada, which has aluminium, as you know, is enormously energy intensive. And Canada has a lot of cheap hydropower. So it produces aluminium, which the US uses in large quantities. And as far as steel is concerned, the US exports more steel to Canada than Canada exports to the US. And the US needs steel in its construction industry, in automotives, in a host of other industries. And there are only about 140,000 people who are engaged, who are employed in the US steel industry. So they stand to lose a lot more if the price war, if the tariff war escalates.
Given what we have seen from President Trump in the flurry of tweets and the action imposed on aluminum and steel, do you believe that this, as Mr. Dasgupta is also pointing out, has the potential to escalate into a full-blown trade war?
Yes, I mean, it could certainly trigger trade friction on a scale that we haven't seen in recent years. But we have to wait and see what the actual order is, because right now what Mr. Trump has done is to announce his intention to impose the tariffs, and the actual tariff orders will be passed in April, around the second week of April.
Right.
So I think we have to wait and see what is the actual order, how do countries respond to it. But the fact is that it's really hitting not China so much, the steel tariff, because China's steel exports to the U.S. have declined in recent years because of U.S. action, you know, duties which they had imposed. And it goes much more to neighboring countries in Southeast Asia, their exports, and also their domestic demand has been rising. They do export more aluminium, but Canada is the country which is going to be worst affected, because I think they have a total of 16% of U.S. Imports of steel come from Canada, and over 40% of aluminum imports come from Canada. So, you know, this is something which is going to hit Canada, then Brazil, and other partners.
Okay, so that's the word coming in from the experts, that this trade war might get escalated if not dealt properly.
Big news from the pharma space. US FDA has issued 3 observations to Sun Pharma's Halol facility. Ekta is here with the key highlights. Ekta.
Well, yes, you know, I just want to put the news into perspective. We already knew that they had received 3 observations. This was a public disclosure made to the exchanges by Sun Pharmaceuticals. So what we know today is basically the details of these 3 observations, which we didn't have. So now it seems to have become public, and there are a lot of brokerages which have written on it, etc. And that is basically the footage of the Form 483 that we're talking about. The 3 observations that we're talking about, the first one is separate or defined areas to prevent contamination or mix-ups are deficient regarding operations relating to aseptic processing. Written procedures for cleaning and maintenance fail to include description in sufficient detail, and lastly, written procedures are lacking which describe in sufficient detail the sampling, testing, approval, rejection of drug product containers and closures. Now, largely, if you compare this to what Sun Pharma has faced in the past, once, you know, over 20 observations for Halol, then that came down to 9 observations for Halol, and now these 3 observations, the quantity of the observations or the number of observations have reduced. But according to analysts and industry experts, it will probably still take some time in terms of remediation, but it should probably see the light of day, you know, in the next 4 to 6 months. Having said that, I want to caveat it saying that there have been instances where even though the observations might look benign to us, the US FDA's reading of it, or maybe the reply to it, would be something which would be entirely different. So that is something that we need to take into cognizance as well. But because of the nature of these observations and the interpretation that we have prima facie, maybe the stock would see some amount of strength continuing from yesterday. And you can see that CS Credit Suisse has already written on it, and they're saying that you know, the observations, for example 2 and 3, are procedural in nature. And while it would take some amount of remediation, it is something that should probably get clearance in the next 4 to 6 months, according to Sun Pharma, according to Credit Suisse.
Okay, so expect some remediation for a Halol facility over the next 4 to 6 months is what Credit Suisse says. Expect this stock to be in focus today. But moving on now to the wars of a different kind, in what comes as some relief to Bharti Airtel and Idea, the Telecom Dispute Settlement and Appellate Tribunal, or TDSAT, has agreed to hear their plea against the telecom regulator's order on predatory pricing. The TDSAT has issued a notice to the TRAI and asked the regulatory body to respond to the issues raised by Bharti Airtel and Idea. Well, another stock that will be in focus today is Britannia. We understand from sources that the company has increased input cost inflation. Manglam is here with the details. Manglam, what does it mean for the company, and the gross margins, would that be impacted?
The gross margins are likely to be impacted. I'll tell you what, Anisha. So the company has, sources tell me that the company has increased its input cost inflation expectation. So it's not the inflation which has increased, it's the expectation that they want the street to build in that has been increased from 3.5% to 5.5%. Remember, this is primarily on account of increase in refined palm oil prices. And that's because over the last 1 year, the import duty on palm oil has been up from 7.7% to 48.4%. We spoke to Pratap Snacks the other day as well, and they were a little jittery about the increase in import duty as far as palm oil is concerned. That's a key ingredient for all these food products makers, the processed fruit products makers. Now for Britannia, in the last quarter, their gross margins did improve. The EBITDA margins improved on account of improved gross margins and the company's own cost-saving measures and product mix as well. But the bigger point is the management had told us that input cost inflation in third quarter was almost zero. They were working with a number of 3 to 3.5% going forward. Now that has increased. A lot of the brokerages based their thesis of investment on Britannia on the back of benign input costs. Remember, Credit Suisse initiating coverage on Britannia on 21st February, and they said that if the input costs hold right now, it could actually go into deflation and help their margins further. Well, the margins may still improve given the company's product mix and cost-saving initiatives, but that input cost tailwind that there was looks like it's become a little more benign than what the street was estimating. So 5.5% has been increased by 200 basis points. Let's see how it goes going forward and what real impact does it have on the gross margins. Definitely will not be a positive.